How about now? Did the audio come back? It'd be a stupid fix if it is. Oh my gosh. Sorry, mom. It came back? Awesome. Okay, that was a stupid move on my part. What I did is I just put myself in the background. All right, we're back. So the options are slightly more bearish than bullish. So don't hold any puts with confidence unless you have a specific reason. Okay. Earlier we played a put and played a call. So far a good day. We played a credit call spread that paid. The credit put spread is paying. So if you're jammed in a trade from before, let me know. Yesterday I lost some money on a credit call spread from the Nasdaq because we got the blindside spike from a huge chunk of the tech rally. The Qs today are on fire because the mega caps have been lagging, the upper right hand corner group. And some of them are playing catch up, like Microsoft, for example. So if I look at the heat map, we have a bunch of red and giant green boxes. That's why the Qs are up. These giant green boxes are a bigger chunk of the total chunk in the Qs than the S&P. So rotation is still in effect. They're not selling anything without buying something else in its place. And the targets, if you read the morning notes, this probably is the shortest morning note I've ever written. It just says, no opinion here. As long as we're above 68.20, here are the targets. 69.60, which is almost here. We've had that target since the middle of October. And through 70.28 and 70.40, 71.22, and 7400. Those are the targets. We're going there without a change in sentiment, not fundamentals, not tariff news, not anything. Feelings. The math has been the same. The companies have been awesome for a few years. They haven't gotten more awesome. The talking points have. So sentiment has changed and has driven the price action. In April, we thought the world was ending. So we sold everything in panic. A few days later, we decided the world is not ending. We bought back everything we sold in panic to break records on the way down and on the way up. We broke many people's accounts in the way, and we haven't stopped feeling good about things. And then to fuel the fire, the Fed said, let's go. We're going to be in a QE, but we're not going to call it a QE. So the bulls have an advantage, and it's huge until they start feeling, again, differently. So focus on the lines, take trades based on your portfolio. Buy protection if you need it. And if it's free, why don't you buy it anyway? It's free. We've owned protection for 16 days, and it didn't move one penny. So we've covered our accounts for 16 days for zero cost. It would take some kind of bullish attitude to not even take free protection. It's literally free. You put money in an account, they give you calls in the VIX, and if the calls of the VIX value doesn't drop, it's free. You can't plan for black swans, right? Yeah. Every day, the VIX gaps up. Like today and yesterday, we had a gap up in the VIX, and then they give it and they make a lower low, and the VIX calls do not move a penny. That's pretty bizarre. I mean, I've seen that happen before here and there, but that's a sustained behavior. Too long to think that this is something normal. I don't think it's normal. I don't know what it means, but I don't think it's normal. What is normal is how they're behaving around our lines today. This is an area that I thought would be resistance earlier. These were our targets. They hit those. If you bought calls, it's up 80%. That's about $90. Please exit. Let me rephrase. I would expect a dip. So you exit or not based on your risk appetite. If we dip, those two blue lines will give you support. That's all the way down to 692. I think the yellow is also in play, so 691.8. 692, 691.8 would be a good level of support. If for whatever reason we lose 691 today, that means the bulls today are tired. They have all the advantages. The options is advantage now. The tailwinds, the big quote dips, non dips. We didn't go red at any point. These big red markers, they were down the flat. They were not red. Somebody said, "What's happening? Why are we falling?" We're not falling. We don't have a red day. We have a green day. We have the Nasdaq is up 0.4%. And the Nasdaq is trying to make an all-time high. And the IWM were trying to make an all-time high. The S&P made it. This is an all-time high for the S&P. We made it yesterday. And then the Dow obliterated the all-time high 2 days ago. Not many people are talking about it because of Goldman Sachs and JP Morgan. Those stocks are on fire. And today they are not on fire. Look at what happened to the XLF today. Look at this nasty reversal. So, but it's normal, but it's nasty. So this was 2% up on no news for the banks. That was really weird. And then this is normal halfway through, but that's not normal. These banks don't move that much every day. And here they are moving like they know something. So I'm going to say it again. The market is very well connected this session, this year, last year. Too many people in business have too many fingers in the White House right now. That's how it is. So they're well connected. They have inside information more than normal. That's my opinion. It's not fact. So you have to assume that they know more than you. So you have to be more cautious than normal, which is why I say, yeah, don't go big, whatever you're doing. That would be one way to protect. Anyway, we bought puts in the XLF on that spike, and we're making money. By the way, we had the puts before the spike yesterday, and we didn't lose any money. That was a telltale sign. It's like, how can I buy puts before that giant spike? The spike happens, and I don't lose money on the puts. So yesterday I said, since I'm not losing any money, even though I'm wrong, I'm going to stay in it one more day. And it's up 22, 23%, which is about $30 a put. I'm not closing it because I told you I bought the puts for a lottery ticket bet on the reaction for the earnings, which is in about a week. And I said, if I make money before then, I would exit. So that's what I'm looking for. So CAT is on the path, and it actually just triggered a lower low. I mentioned it at 4:30 in the morning my time, I think, if 4:45 maybe. I said, watch Caterpillar, super strong performer, has an easy breakout. I said, if they don't break out, they might have a dip that could be violent. I mentioned the number, but the number that I really am thinking about is double the violence to the downside. So don't be surprised if CAT goes back to 580 or lower. What? That's a mile. Yes. I am short, so I'm speaking my book. I don't know if I'm making money or not. I'll double check in a minute. It was a credit call spread, nothing serious on a big up day. So I only short because I want to sell expensive things. Just like I go long when we dip, because I want to sell expensive things. If we're falling, I want to sell puts and put spreads. If we're rallying, I want to sell calls and call spreads. Not because I'm contrarian. That's where the money is. Who's buying what? How much is it? It's expensive. Let me here. I got you. So if you do it right, you do well. That's why it sounds like I'm contrarian, but I want to sell expensive things. So those are the things that people are buying. So let's see here. CAT. Our short is at 630, so we are down a little bit on the credit call spread, but the delta is 27 or 28. So we still have the statistical advantage to win. So yes, the P&L is red on that trade, but the odds of success still favor us by a mile. I'm not backing down. This trade will win. If not, I'll deal with it as we approach. If the delta starts to rise beyond 0.35, then I'll deal with it. And feel free to bug me about it. let me see here. Somebody asked me about it. What are you going to do with it? Nothing. Now, Boeing, on the other hand, it had news today, and that sold call will need some attention. We have until the end of January. In the next couple of days, bug me about it. I am in both, so I'm in there with you. Whatever I do, I will update you. This one, I'm doing nothing. Statistically, I'm winning. I'll leave it alone. United Airlines. I'm short until the end of December, like last year and the year before it. It was an easy $700 per contract. I just renewed it, right? Let me see if we're winning or not. United. We're not, it's flat. I'm leaving it alone. The delta is 27 for me. That's the odds are in my favor. The trade is for the end of the year. It's one and done for me. I don't have to babysit it. It's a mile above here. Okay, Micron is definitely red. Statistically, I'm in it. I haven't done anything. So that's the big picture. The fast trades today, so far, we're firing on all cylinders. I mentioned a very narrow iron condor, and it's green. I would scalp it. It made you $50, $55, $60 as I'm speaking. It's getting more profitable. But here's the trick. It only risks $250. So that's an outstanding performance percentage-wise. And this is a new system we're testing. I developed a new spreadsheet that in the morning it tells me where the valley is in the option for the day. It's not a fast trade. It's a range trade for the day. Consider it on like a 15-minute chart. So I'm trying a new thing, selling really aggressive iron condors, like collect 150, 170 on one side, 80 and 70 on the other side. So it's kind of like a loose iron butterfly. And 2 days, it's playing out. It's showing promise. 3 days. So we're keeping an eye on it. Until it becomes bulletproof, I won't be pounding the table. Iron butterflies have worked as long as you're not willing to hang on to it all day. So the new put wall and the call wall are working. Yes. Yes. Oh, yes. Yes, now I get it. Yes. Okay. Charting event people. Yes. So you notice there's something on my screen talking about tools. The way you can improve your odds of making money, which is basically beating your opponent. Anytime you buy something, options, shares, anytime you sell something, there's an entity on the other side of that trade, right? You're buying a call, somebody thinks you're an idiot, they're selling you the call, and vice versa. So you need tools. Last year, we developed a couple of huge tools, one of which is these bars that you see. And today, I also want to remind you that we added these XOs. One of our members, Laurel, in the live room, posts charts all day. All day. If you pay attention, she's posting gold. You just need to click on the picture and look at, like right there, scroll up in the live room, right there, that XO chart. Yeah, that XO chart, you can see it right there. These are called PNF charts. That is what fuels these X's and O's that are here on my screen. So I was like, you know what? She's been posting all of this stuff for years. Let me go and rekindle my love with these XO charts. And I did. So this can be considered the oldest form of technical analysis, these XO charts. I think they date back to the before the 1900. And so very old style of checking the action in a chart. And the beautiful thing about it is time independent. It's like shares, not options. So anytime, it doesn't matter how long it takes, the X's and O's are based on pure volatility, distance traveled, volatility. So I did some research. We developed this little tool. We call it the XO. And X go long, O go short. You can see it delivers good results. Now, it works for any chart, any time frame. Here we are looking very fast charts, but this works on slower charts as well. You just need to tweak it. So we will share this tool with the attendees at the end of January, and it works on TradingView. It'll be one of your indicators. When you click on indicators, you go to invite only, it'll be here, like this one. And I'll show you how to use it once you get it. You just need to tweak it. Every ticker, you have to make modification because it measures distance. And on a $600, on a $700 chart, it's different than a $30 chart, different than the SPX chart. You're welcome, Raul. Thanks for the nice chat. So the XO tool will be yours after the event. And I think you're going to love it. So I use it for long-term trading too. When you zoom out and you look at a chart, long-term, you turn off all your lines and you say, okay, where are the levels that mattered? I can see them. I've been doing charting a long time. I don't need a lot of tools. So even if I didn't have a tool, I can see them. But wouldn't it be nice to have a tool? So watch how effective in telling us turning points. Even if you don't trade it as enter long and enter short, where you see a cluster of X's and a cluster of O's, or a cluster of X's and O's in the same zone, you know that level means something to the machines because they look at that stuff. So the algos look at this stuff. Therefore, it becomes a self-fulfilling prophecy. So if I zoom back and say, I wonder what kind of support there is if we lose the low of the day. And you go look at yesterday. Let me turn off my... And you can see that they did 1x yesterday and rallied. They had no bearish. They didn't have 3 bearish steps yesterday to trigger an O all day. That's a trend day, right? One-sided affair. X, no O's until here. Cluster of X's and O's. We got it. So now we have a level, 688. Look, they battled over it. 688.5. X's, O's, X's, O's, X's, O's. And you can use that concept on a higher time frame to slow trade. So it's not a fast trading tool. You can use it for any speed. And if you're interested in joining us in January, we still have a few spots. The class is in Florida. It's in Orlando, easy to get to. Wow, look at the coil here. And Orlando, that means you can bring the kids and let them loose. In Orlando, the happiest place on earth, Disney World. You can sign up at simplestocks.com. We have in the nav bar an events tab. The first one will be a charting event. January 30th and 31st. That's a Friday and a Saturday. It's an all-day event on Friday. Party on Friday night. It's always a blast. Well, not party, a get-together. Happy hour. Saturday, we continue studying all day. And the charting events is an eye-opener. Don't miss it. You'd need it. I'm telling you, you need it. It's either now or later. Back to the show at hand. They're battling over this line. I'm going to leave it for visual representation. This red line will disappear eventually. So I'll leave that one because it's important. This is what I thought would represent some sellers hiding. This is where I thought would be, if it is a target, then it would be a solid spot to buy a call if you want to swing up. Put calls in. Okay, thanks. So we have an X, we don't have an O. We might get an O if we cross 692.4. So this is an important tick right there. Just like all of like this tick right here, this one. Something happened here, flashed low, whatever, news, headline. Oh, they told us 691. Yeah, we want to be buyers. So there's a buyer in 691. Keep that in mind. So there are some sellers in the options. They're not retreating. Like yesterday, it was a stick. All right, so this whole zone is supportive. And 691, you don't want to lose 691 today. It may open a trap door. I Oh. By the way, there is a note floating out there. There's a note floating out there by TrendSpider. The only like TrendSpider, like it's a reputable company. The people that brought you the charting platform, they are traders themselves, and we've had the CEO in our room before, Dan. They're floating, not him, a message charting the Fed balance sheet, like the balance sheet of the Fed of the United States. And they're saying it's fallen enough and it's starting to curl up. What does that mean? It means they're priming the printers. It means what Powell said, we're doing plumbing maintenance, which is a QE. Your quantitative easing. You're physically injecting cash into the economy, not just cutting rates. You're injecting cash into the economy. So the idea, again, the entities taking the cash, they go out and use it by investing it in you, people taking loans. So if they're indeed trading the chart of the balance sheet of the Fed, that means it's going to rally. That means we have more QE coming. That's the idea they're doing. I challenge that. I just don't think we have the appetite to get back into QE mode. That would probably have adverse effect on inflation. I'm not an economist, but just pure logic. So we'll see how that plays out. Short term, okay. Those are inflation protection treasury things, right? Tips. I don't know what they are. Yeah. Treasury Inflation Protection Security. Is that what that is? Uh, Temporary. What is the T? The Fed is buying tips, not bonds. So, okay, so is that why he calls it a plumbing maintenance versus a QE? It's money, money. Correct. Yeah. So the XO tool, I briefly explained it here, um, but going into details as to how you tweak it and work it, that's not the right forum for it. So for those in January, most definitely we will get the benefit on how to work it and tweak it. So these red ticks look alarming to somebody that doesn't know charts, but if you just use the logic that I talked to earlier, Julie had a question about silver. You go from point A, you go to point B, you go back to halfway, normal price action. Sometimes it looks abnormal because of the speed with which you rallied. I just showed you XLF. Okay. I just showed you the XLF. Same. You go from here to here, you go back, whoops, you, you go back halfway. So that's one logic. You don't need a degree or a ruler. You just look at it, you can tell where halfway is. The yellow bar, 691.80, was a line that stuck out in my eye. The blue one is automatically, I programmed that in automatically. So 692, easy round number. You can remember that. In a minute, I'll do a round on the ETFs. So there might be a small bump here, a small bump to 692.60. Let's see if they can beat this yellow line. I moved it a little bit because now it means more where I placed it. We have our lines from yesterday below. We will get to them if we need to. So far, there's no evidence that we need to. They're still looking to defend 91.90. See that? I'm going to go to Tradietics. I can't stream that here, but I will give you the benefit of the information. 625 is the highest magnet on the QQQ. 625. So we're there already. That's not groundbreaking. 694 is the highest magnet on the SPY. But they need to stay above 692. And the SPX 6970 is the highest magnet. 6970, they are at 48. So if they clear 6955, they can head to 70 unhindered. That's according to Tradietics, not me. Okay, let me see if they have a algo flow. Algo flow is red, not necessarily a death knell, but it is red. Thoughts: Micron 340, 370 debit call spread expiring February. Debit call spread. Okay, so somebody chasing the breakout. I can't say no to it. I am short. I would caution going long after a 50% rally in 3 days or whatever. So yes, you have the tailwinds. Yes, you have the talking points. Yes, you can do it, but I wouldn't do both. I would do one. I personally would tend to sell those or something like them. Like I'm personally short Micron, but very, very cautiously. Like I respect it so much that I gave it a mile. as they say, and a half. So it would need to double before I start losing money, basically. Can you give me a Palantir put expiration for 1.9? If you want a short Palantir, buy a put in the money and sell a put well below it. Don't buy a put in Palantir. If it has a good day, it breaks your account. Okay, speaking from experience, I shorted Palantir last year. It was a difficult trade. I won. I thought I was going to make a lot more money. I made money, but it was a struggle. So don't buy a naked put in Palantir. I don't think anybody should do that. I mean, you can make a lot of money, but you can lose a lot of money, and it seems coin flippish. Oh, for this week. Okay, so let me check on Palantir for this week. Give me a minute. Whoops. Okay, Palantir probably has $1, 250. Okay, so this is what's going on in the options today for Friday. Bullish behavior. So they're gobbling up the upside in Palantir. Buying a put for no reason is hazardous. So if you have a reason, let me know what it is. I don't see a bearish harmonic or anything here on this time frame or that. I mean, you can short going into a prior fail with a stop, because then if they break through this 185, 84 zone, they will level up to 91. So if you buy a put, make it right below current price. If you buy a put spread, make it for 3 weeks, not this week. A put spread will cost you the same whether you use it for this week or next or the week after. Why wouldn't you give yourself some more time? So Laurel just shared with you a Palantir trade chart. Okay, so be careful with that one. It is a beast, and the fans of the stock are unreasonable. So you're fighting fanatics, not fans. Fanatics are hard to fight with short term. The way you beat the fanatics is by taking a logical trade, give them months to play it out, and enough time for you to change your mind without damage. Again, I'm sharing my experience with Palantir from last year. I think the stock needs to be cut down more than half for it to become value oriented. It is 5 times too expensive. Let's cut it in half, 2 times too expensive. So I think it needs to be cut in half to be reasonable. It is 110 times its sales, something I regurgitate all the time. And by the way, if you are members, you should be. Go into the platform, click on the tab called Resource. There's a full page with charts. Yes, you can access TradingView charts in there with all their capabilities. All you have to do is just put the ticker, boom. You get all kinds of metrics, you get RSI. It's pretty cool. Just log in. Try to break it so we can fix it. That's how we improve the tools. I'll show you what it looks like. It looks like this. Whoa, can't move it. So this is your new navigation bar on the left. Way easier than before. The dashboard has everything. You can filter and search by keyword. And this resources will land you here. You have links that don't suck, as they say. All kinds of stuff, dividends, short squeezes, CBOE, earnings whisper. And then you can look, Palantir, how funny. And you have the moving averages. You can add and subtract. And below here, it says weight. Those are probably RSI related. We need to fine tune those to make them more effective. And you have metrics, price to sales, PE, growth, and all of that. So the new world, new year, new tools, improving, always improving. Your feedback will drive us to do more. Yes, you sure are. Yes, it's too cheap. The price will not stay here. Okay, 691 might be retested after a small pop. So let's see if they want to come back to 691. However, I want to caution you this is like a 15-minute chart, okay? Let me set the expectations. Okay. If you zoom out to 15 minutes, it says that we could be headed to 691 in the next few hours. So if you want to swing trade it and you use today's puts, the time might chew up your puts. So credit call spread would be the better way to do it. Unfortunately, the one we traded this morning is no longer available at 1. So let me see if I can find you another one. Oh, speaking of which, close the iron condor that I mentioned near the open. It is a $90 win from a $250 risk. Divide 90 by 250. That's a massive win. That's a full iron condor playing out in the course of 2 hours. Please close it. It was set between 69.60 and 69.30, and it was based on my new spreadsheet that forecasts the open. 69.65 would be the credit call spread to short the market and give it a couple of times to play out. And that's not an aggressive short. It just leaves a little bit of upside room. So $1 in the SPY. But if you do want to buy a put, you can buy it and baby it. This scientific number that allows for a new high and it still be in effect. So even if they go up to 693, that pattern would still be there. And it's a slow moving pattern. So don't expect fast results. You don't have to jump on it right away if you feel afraid of the market. That's a pure trade. Take emotions out of it. Take opinion bias out of it. It's just scientific thing shows up on my screen. I lay it out. The bulls are in charge, so it's not going to be easy to fall. That's why I say selling something might work better. No, it doesn't. Oh, okay. I'll. It might be like I need to find out what the data provider, which we pay for the data, so we can go back and ask them. Yeah, I searched data sources, and I think I landed on one of the best ones out there. I'm told the SPX ticker is hard to find in there, so I'll find the right ticker for you. SPY will give you the same information. Well, the metrics will be NA, NA, NA because they don't have PE or whatever, right? It's not a company. Okay, if we lose the blue bar, if we fall to 691.8 or 85, we may overshoot by 40 cents lower. If until then, 692 is very tiny support, so they can build on it to make a very tiny higher high. I do have a 1-minute bearish harmonic, but I already paid one target and a half. And in this environment, one target and a half, that's basically it played itself out. Microsoft finally breathing. That's a 2 sigma event, like a very unusual occurrence in Microsoft on a 1-day move compared to its last 30 days. So we look 30 days back and we take on average. Costco, another violent day, finally earning some respect. We went long on the dip. We never shorted it. We went long on the dip. Palantir, doing Palantir things. I don't have any trades in Palantir. I do not intend on trading Palantir. This year's pick is Micron for me. My thesis is I think the market is overestimating the benefits of being able to raise your prices by 150% and still retain the business level you have. I think the 150% raise in price to your clients is because there's something bad in the industry. So even though you can collect more money per widget, you can sell fewer widgets because you don't have them. That's my thesis, part of my thesis. And even then I left them months to play it out. They can rally for 2 months and I will have time to defend it very gently. If you followed me in a call short on Micron, it's red on paper. I don't panic because I don't start losing money until I'm assigned and $20 high, $21 higher. So at $541, I will start to lose money. You understand that? Okay. But I understand the fear that the portfolio looks, oh my gosh, it is down X million percent. Yep. But if the bell rings, it's down nothing. You won. You made $2,100 per contract. Um, so I don't panic out. The way you can control your panic is just by buying a call. Short, like not short term, like 2-3 weeks out. This way you'll say, go, Micron. So you're basically long, short term, short, long term. That would be a moderate way to approach it. GDX, nice bounce. So the GDX fell lower than yesterday. What's going on with these traders? And now it's bouncing midway. So it's now in the middle of yesterday. Very violent. So it will be a very bullish thing if the GDX people can take out yesterday's high, which would be amazing. I hope they don't, but if they do, that would be very, very bullish. So the question on this bounce is how will the options develop? Like yesterday, I said look out for these bars. If they go stick, it's over. It's a one-sided affair. They're still defending $3. I told you the algo flow says the Traditix gamma exposure, 0 DT gamma exposure. Basically, they're saying that the market makers have the best interest of pushing the prices up towards a level, right? That's what they're saying. Let's see if that level is still the same. 69.70 is the most prominent spot they want to be at. But they basically say they can go anywhere they want. Where are they now? 69.53. They need to, if they go above 55, anything is possible to 70. As long as they're below 55 on the SPX, they have enough magnets to keep them at 50 and 40. So basically saying the bears better not let go of the reins here, and otherwise it's going to be a straight shot. An unhindered path to wherever they want, 75. So if you sold the credit call spread at 69.75, you're making 50% of your profits. You might want to scalp it or take it off. Earlier, Tom asked me, would you close a credit call spread? I said, hell yeah, because he made money on it. And his was narrower than the one I proposed. So look at the QQQ, 626.31. Is that a high? Are we close to a high on the Qs or what? I lost track. Close. So check this out. This chart, whatever it is flagging, right? So this chart broke out from here. Whoa, okay, we can't do that. And broke out from 540 and then stalled around 580. I remember that 588 number. Then came back and tested 580 for footing, and now has been flagging, consolidating, squeezing, whatever, inside a very narrow range. So focusing back on this part of it, higher lows knocking on a roof, I would consider it. This was an overshoot on earnings exuberance. This was a bull trap. So now if we clear this little guy here, this area of 6 where we are, if we clear it, this won't mean a lot. One last hiccup, but the target will be up in the 660s and 670s. Now, here's the fun part. This is not a trading part, it's a fun part. Let's say there's, quote, rotation. In other words, let's say the money piles in here and they take it out of the IWM or something else, financials, to feed the beast of the tech. We might have an SPY and a QQQ close together in value, like in numbers. We might. It's a stretch, but we might. Look, stick. Oh, by the way, yesterday, in the end of the day, there were no dots that are red. There was 0 red dots. Nothing. It was a one-sided affair, just up, up, and away. There were no red dots. And you can see that the KRE is bouncing. So the nail in the coffin of today's downside opportunity or flat opportunity is if the KRE takes out 67.50. That would be, I would be shocked, and I would be like, whoa, this market is going places like very strong. Until then, I'm watching Palantir sustainability versus Caterpillar hesitation versus the gold and silver movements and the relative underperformance of Bitcoin. I'm trying to gauge risk appetite. VIX is broken. I need something else. And those things collectively replace the VIX for me. It's a complicated thing, but in the absence of the VIX, I need something. Anybody that says, "Oh, the VIX is saying everything is okay," I think you're missing you're missing a puzzle piece. So be careful. The VIX might be broken. Ah. You see that big red W brewing? That might be 2 things for you. Your opportunity to buy the dip if you're not long already. So don't buy a call here. Or to buy a put and profit down to 692.8. So if you're not long and you're itching to get long, hold. This red thing might give you an opportunity to go long on the dip. So that call you were eyeing, the call we mentioned earlier is up 120%. I would be out of that. If you're looking to buy a call, you buy the at the money call, like a 693 call on a dip. Let me see how much it is now. No, the 692 call. The 692 call is 160, right? So you say, I don't want to pay 160. I want to pay 100 and put your number. If we dip like I think we could down to 692.8, you get filled on your call because you think we're going higher. I would be waiting and seeing what happens. I wouldn't go long here. I would wait for the dip to go long, but even then, I would wait to see their commitment at 692.8. I appreciate it. 30-second harmonic that you're seeing on the screen says we could go to 692.8 or 692.6. That's target 1 and 2. Thoughts on silver? I have lots of thoughts on silver. You just need to tell me what time frame. The question is, what do I think of silver? The answer is different time frames. Overall, if I'm long silver, I am out as a trade. I own silver. I'm not selling it, even though I think it's a top for a long time. For 30 days, okay, the bulls are in charge. They're buying every dip and making a higher high. So if you're looking to trade it, you want to be trading it on the upside for 30 days. You need to buy good dips to profit overnight to the high and scalp. From a swing trade perspective, I would be a short for 6 months. Okay. And the attendees of January, you will get a harmonics tool as well. And so I would suggest you brush up your skills on how to use the Thinkorswim platform in order to, like, if I give you a gift and how do you import it, that would help a lot. That itself is worth the price of the whole thing. The harmonics are an amazing tool. Some people hate it because they don't believe in it. I love it because the machines believe in it, and that's all that matters. Whether it's right or wrong, it plays out. There's no denying it. You see it here every day, and I'll show you how to use it. We have 2 days. We'll focus on whatever you guys want. We'll cover the basics, and we'll go into details of things that make money. 692.8, target 1 on that red thing. As long as they stay below 693.6. If you read the morning note, very brief, very number oriented, no opinions. Just where we are, where we can go, what is in play today, this week. We have a jobs number on Friday. I don't know what the number is going to be, and I don't know how people will react to it. So that would be a guessing game. But then Jack tells me this morning here, he said that we might have also a court decision, another one, I lost track, on the tariffs. Are they legal or not? That is definitely a subject that is sensitive to markets. So, Yazan, did I answer you on silver? I'll share the chart. That's what's going on in the options of silver for this week. Actually, I think it might be 50 cents. It is. Okay. So that's what's going on with silver this week. They're not bearish yet. They're looking to defend 70. That's for Friday's expiration. Charts wise, they're buying dips and making higher highs. This last dip lasted 4 days, but they ended up making a higher high yesterday. So the question is, which they will do first, cover the gap down at 66.5 or make a higher high? Does not rule in favor of the tariffs. So the tariffs will be illegal. So you're saying we have an 80% chance of a rally in the market? God help us. Okay. I don't like these headlines. They just disrupt the flow of action. So a support zone in the SLV is below 67.50. If you lose 63.50, you lose a big step. So buyers into 63.50. If you lose 63.50, the buyers may have let go of the reins. I would short this for a decade. Not really, but I think this is a generational top, as they say. We had one in 2011. This one is bigger. The one in 2011 brought 15 years of red. It lost 90% of its value, I think. 80. Look how much more beastly. And this is GME effect. We have people propagating videos and saying, we will not sell. Wall Street is trying to break us. We're not blinking. We're holding. We. Videos, machines, very dangerous. Wall Street doesn't lose. The retail will lose in the end. Just like they did with GME, they lost. Also, thanks to Ragu, I haven't verified it, but I'm sure it's there. SLV may have changed characters. Do some homework. Like what it means to own a stock. Do your homework. If you have any questions, let me know. And that red thing that I said has a target of 692.8. I said also as long as we're below 693.6, right? Above 693.6, it resets. You see how it's trying to draw itself in gray? So there might be, it's a rising wedge that wants to break down. Every rising wedge eventually breaks down. It has a dip, 50% before they make a higher high. So every rising wedge has the propensity to dip. I'm saying this one said we can go to here as long as we're below here. But if it doesn't happen, the rising wedge extends and it says, okay, maybe we go down from there. And the dip will be the same. It'll eventually go back to the same levels because the bigger the wedge, the bigger the 50% dip is. So it would feel worse, but it will be the same thing. The bulls are completely in charge. So just for risk appetite perception, the morning credit call spread is back to its full value. Earlier, 30 minutes ago, I said it was 50% profitable. I would close it if not half all. Earlier, I pounded the table, closed the $90 win on that weird looking iron condor. And guess what? That one is probably no longer a win. It is no longer a win. It is now a $20 loss. So that was a good call because 90 divided by 250 was a huge win, and it would be greed not to close it. The credit put spread won. If you bought a call at 692, you're up 50%. You should also book that one, in my opinion. If you're trading actively, this is not for anything outside of today. That's twice we played calls for about 60% each. And you can rebuy a call after the dip. Dave, I hear it's Friday. I don't know. Google it. All I know is to be ready on Friday for volatility. We may have a 2% day on Friday, up or down. I don't know. Do we have any, I should reach out to him again. Do we have anybody that does GAN? Or do you follow a GAN trader? What are the dates they're talking about? You know how they say if Venus and Aries and whatever and whatever. When are the next dates? Yeah, Adnan is not here. He's got his own thing going. I tried. I reached out. Yeah, I know. I was soliciting an answer. The upper right hand corner of my screen, if you're new or if you're watching on YouTube, those are the mega caps. I think they're the focus. I believe I mentioned them in the morning note. I want you to walk through the logic with me. Middle of October on 1010, we had a market crash, right? This was one candle. Look at 2 days ago, open candle. That one. That's a doji. They opened and closed in the same spot, but they loved it and hated it, and they pretty much touched that. This is months old. And look left, this giant candle. Look left, another giant doji. So this purple box is a level they're fighting for, and it's been in contention for months. All right, so moving on. FOMC box from one of these Fed head meetings. This has been a pivotal spot for months. I remember it. It's a place that they failed badly. So once they get back to it, they fought over hard. Once they get back to it, you have to pay attention that it might be resistance. This is evidence of that. And then this was the exuberant reaction to the upside to Microsoft and Apple and all of those earnings of the past. So it's going to be a pretty awesome couple of weeks to see what happens here. I don't think the market goes anywhere without these guys. Okay. So I think this is worth watching. I'm not watching it tick for tick today because it's a one-sided affair. Yeah, I have to revisit that logic. This white box is supposed to track the average of the last 5 days opening ranges. There's no way that that is the average. This is an all-time high on the S&P. So mathematically, that is impossible. Datadog long you mentioned yesterday is a huge win after one day. Amazing. Yeah, yesterday I sent out 3 longs in writing. They were swing trades. Nice start. Yeah, I said you can buy shares or call spreads or sell put spreads, the idea. So if I took it for a trade and if it was a sizable win, they gave you the win in one day, I would exit as a trade. If I started it because it's a swing trade opportunity, and it was, um, and then you can stay in it. So the question in data, I don't like the chart at all because it looks like this dip is not like a normal dip. So now the challenge is as they approach 150 and 155, what happens? I think there's going to be a big fight on that one. So if I took longs as a trade and I got rewarded, look at this P&L. It's gorgeous. We have so many good looking P&Ls these days, it's almost fake. The ETFs made a comeback. That's where the money is. So this S&P is made up of components, mega caps, 30% of it, roughly. This band of ETFs, 30% of it. So these guys have been strong, but not all of them, but enough of them. And if we go to look at the heat map again for a helicopter view, I wonder if it's going to still look the same. Earlier, I said, I bet you it's a bunch of reds with a bunch of green boxes, 4 green boxes. It's still, this is not a green day, right? It's only green because we have 5 stocks that are super green. Lilly counts. Lilly, I think, is 1% of the S&P. So we have a record day up 0.2%. The Nasdaq is up 0.6%, but up 0.2% because it's not the market that's up. The small caps are flat, which is pretty good because they went green and then went red and now they're flat. So overall, we have a green market. Earlier, the perception was we're having a dip, and we weren't. We were just falling from a gap up. Micron is acting now like silver was acting 2 weeks ago. If you have tracked silver, every night, every day, it would close weak, and overnight it would gap up and go. So basically, they bought every dip shallow and rocketed past the prior high, which is what Micron has done. Micron is moving up more after the earnings when it actually delivered the news. So on the earnings, it was up a lot. And every day after, every dip that they bought, they rallied more than the earnings. Like, for example, 3 days ago, it goes from 290 to 320. It dips 1/3 of the way, and then it goes to 346. And today it dipped to 336. So the next stop should be 356 or 55. So silver did that, and now Micron is trading like silver. If you told me Micron is going to be able to make the shift from whatever it was to whatever it's going to be, not selling commodities, then maybe the metrics we have now are irrelevant. So that would explain the exuberance. Like maybe they are committed to not sell apples, but more oranges. So it's going to be a different company altogether. But there's a chance that it's just a spot in time. I don't know. That's why I'm not very close to trouble with it. I just give it a space. Not a seller in sight. Not a seller in sight. So 69.75 was the target they seek. Don't hold puts. As long as you see all these green bars, don't buy puts. You can try your luck at selling a call or a call spread if you see a bearish target. But if you don't hold puts. When this big gray thing turns red, then you can try your shot. This one, the 1/3 of the path they did, but then they triggered a stopping point. So if you bought a put on this one and you're not out yet, I guess you can wait a little bit to see. But put stops, don't break your rules. Small losses you can recover from. Don't ride it to zero. And now we have Apple helping, which was a drag earlier. Meta coming back from depth of hell. Amazon monster. Somebody knows something. Okay. Trying to find a good trade. Maybe we shift to the IWM. Maybe the IWM is easier to trade today. Okay, we can trade a put in the IWM. I'll tell you why. It doesn't have a hero, so it needs a sector to move it, right? So it may give us some time to be able to set it up. Hold on for a minute. We got to set it up right though. We have 256. What? There's no way that costs that much. They're so cheap. That tells me they don't want to go there. A 257 put, which is above current price, is not even $100. So yeah, let's play with the IWM a little bit. It's a small expense out of pocket. 0.94 to buy a put. Let me explain to you what's at stake and what the thesis is. I'm shorting a stock that has a bearish harmonic and it's going into a prior fail and it doesn't have any single heroes in it. The financials could be a game changer. The XLI did so much, they're exhausted. So if you want to buy a put, forget the SPY. There's a dip here available statistically, either from where we are, from a little bit higher, and it could be down to here. Now, I haven't traded the IWM fast in a while, so I don't know how much it pays. So you spend $95, $94 out of pocket, you might be able to make 30 to 40% out of it. So since this is your first, maybe you do one just to get it out of your system. It's a nice way to learn how to trade fast if you've never done it. All you need to know is where to go open the put, which means you use today's expiration, you go buy to open, you say I want to pay 95 and they'll give it to you. And then you watch it and now it's 106, you're up 10%. And since this is your first, let it go. Experience greens, experience reds. You need to practice your emotions. One contract. You want to develop the habit. This is not like playing poker with fake money online. This is real money. It'll still stir up the emotions. So now you're up 12% and you say, okay, I'm not going to book it. I want to experience what it's like to miss out on booking it and then going red. Like if they bounce and they go a little bit higher, the put is going to go red. What does that feel like? Because you don't want to learn these feelings in yourself when it counts. You want to learn them when it's one contract. The worst you can lose is $30, maybe, and some hurt feelings, and that's it. So it's up 18%, $20. So if you were already seasoned and you did 5 or 10, I mean, it's a decent trade. And we have a tangible target. I tell you, 255.5, I would be out. I wouldn't be in it below that. So there should be support inside this yellow circle that I just did. So 23% reward, $22. Not a bad trade. Okay, Spartacus, nice call earlier. You brought it up. Oh, look at these guys. Look. These guys. $30%, $28. So if you said, I wanted to make 30% of my money, you exit. If you want to experience disappointment, exit now and watch it go to the circle. You miss out on another 20%. What does that feel like? This is where you work your emotions out. You want to say, okay, this is not a big deal. I've done this before. And once you gather enough skill to be able to do this almost on demand, like somebody said, what can I do? I said, let me go look. It's like, forget the SPY. Too many variables. You got the banks, you got the mega caps, you got this, you got that. Here, you get the market or not. %40. The yellow circle should have buyers in it. And this says that there are buyers. They're going to defend 255, which is 80 cents below it. Split the difference in half, you'll get the circle. This is live hookups to the options. By the way, on the SPX, there is a fight here. There's a call wall where we are on the SPX and a put wall. So 69.65 is the center of a battle. If you have an iron butterfly there, or if you sold a strangle, you're making money. I don't know if they can stay here all day. If this was late in the day, I would say you've got something. But what are the odds of being here all day? So I would scalp. If you have the credit call spread I mentioned at the open, you're back to the original value. It's still a viable trade, even though it's set where TradeEthics says we're headed. Palantir is approaching one standard deviation, which is basically unusual position number 2 for a day. That is outstanding. Alphabet, going back to the highs of the day. What? So the only mystery on the SPY is what happens to the XLF. That equals NVIDIA and Alphabet combined. That's the only red thing. It's down 1%, and it's still not halfway to the whole last couple of days, maybe. So in that IWM put, you can stay in it because I think we can finish the red arrow with the support in the way. But if you took it as a trade to make money, you made $30, a little bit more, 30%, a little bit more. If you want to let it ride, let it ride. It might turn out to be a $60 winner. I don't know what your goals are for today. We do this all day, every day, so we'll find something else if you missed it. And people outside of here also got to see this. We're streaming live on X and YouTube. I have not gone there. I'm not checking the comments there. So if any of you see comments that need addressing, let me know. I'm trying to understand mental state. You're crazy. Some trades I exited. Yeah. So the mental aspect of it is a huge part. So Arlenis opened that door for us years ago. And basically, it's a huge part of your success or failure. If you can, like, you can be upset about something, but don't trade upset. Like, you hear me get animated every once in a while, like, why are they doing? I don't trade angry. I get angry. I get emotional, but try not to trade with emotions. You'll make mistakes, and the mistakes will tend to be big because they're emotionally charged. Like right now, you lost half the greens. How does that feel? If you didn't exit, like I said, you lost half the greens. It's still not a losing trade. Does that upset you enough? Do you panic and close it? Or do you say, no, the thesis is still alive. I should stay in it? And if you want to reduce your emotions, here's a trick I used years ago. Don't put the size of the trade in front of you when you're making decisions to exit or not. Let me explain. Have Excel open or Google Sheets. Put the numbers in there live and make a formula to where it's telling you what you're making and losing per contract, not in total. Don't look at your P&L to make the decision. Because if you're losing 20 cents a contract and it's within your losing allowance, like if you said, I'll get out if I'm losing 20%, and 20% is 20 cents, I'm making these numbers up, and you have 20 contract or 10 contracts, and you go into your platform and you see you're down, whoa, it's a small fortune. Now you're making decisions with emotions. But if you're looking at the per contract amount, you're still looking analytically. Oh, okay, I am down 20%. I allowed myself 25, so I'm losing 20 cents. But you go over there, you're losing 2,000. Gulp. Your decision will be not 20 cents base, but 2000 base. So use the per contract. Monitor your risk over there if you want to, but when you go to decide on closing or not, make the decision from a spreadsheet that doesn't show you your damage, your total damage. That's a trick I used to use. And eventually it becomes your the way you think. Like, yeah, I know I'm down 2000, but that's just 20 cents. Okay, looking at the options chain, we are definitely pushing the upper limits of what's available. What do I mean? We are inside of a heavy call zone, which should be somewhat resistive. So we got here. It shouldn't be as easy to go through here. Why am I watching the IWM suddenly? Because the SPY is doing its thing. We are in all-time highs. We don't have any reference points. You're either long or you're not. I wouldn't short the SPY here. If you're shorting the SPY because you think it's going to give this back up, don't use today's puts, use tomorrow's puts. Because today's puts, they're designed to chew you up. The green bars on the SPY, you can monitor it here. They're just too big. There's no resistance. They can either stay here or drift up. There's very little chance of dropping more than 80 cents. All right, thank you. I'll see you tomorrow. By the way, Ryan is not here because he had a baby. A few days ago, he sent me a message. So he's busy with other things. Yeah, he's not here, so your words are falling on girl or a boy. Good question. I'm gonna say girl. I don't know. I don't remember. I have a long story that will make you laugh about that, but I'm not gonna share it here. I will share it in January over drinks about how different we are. It will explain how come I don't know if a girl or a boy. College funds? Who needs college? Listen, in the future, we'll have neural network implants. We don't need to go to school. We'll just learn stuff by implanting it. It'll be an upgrade. YouTube. Yeah, buddy, the University of YouTube. My son built a career on YouTube. He owns a shop because he learned everything he knows from YouTube. He's never been to any trade school, any nope. He said, "I love this. I know how to do this. I don't need anything." He watched years of YouTube when he was 15 years old. By the time he was 17, he was cutting up trucks and rebuilding them. And now he has his own shop. No YouTube necessary. Too early to roll? It's too early to roll. Suddenly, I'm Mr. Almanac. Abort button gets out of line. Yes. Nice. So the put is still green. If you're still in it, the thesis is still there. Look how slow they're moving. This a 30-second chart. They're stalled. 30-second chart. $700 today. I don't think it's in the books. Let's go ask the experts, sir. Let's go get the statistical possibility. Well, there is zero chance today is 700. That's literally what it says. The delta is not showing anything. Zero. But nevertheless, there are 9,000 transactions and calls up there. I would in my hands, or you can go one step higher and collect $5 less and give yourself a buffer. But actively trade it. Don't go away and come back and say, "Heck, I went into a meeting, I came back, and I'm at maximum loss." If you can't babysit it, don't take it. So, talking charts again, since we mentioned charts, you can see a head and shoulders building. But if you only see that, you should consider the fact that there's. So you're saying, okay, there's a trigger, a bearish trigger just below. But if you look above, there's a bearish trigger just above, which is the prior high. The shape doesn't matter. And if you see a head and shoulders, it's not a reason to buy a put. It doesn't tell you it's going there. It just tells you if you cross this line, we may go there. So I wouldn't buy a put because of it. We're not holding a put here because of it. We didn't say buy a put because of it. We said buy a put because waves suggest this following path. So it's forecasting a path rather than an outcome that is triggered by something else. So that the head and shoulders, somebody's mentioning it, that's why I'm answering, is not a reason to own a put. It just says here are some lines you might want to use to measure your path. Doesn't predict the path. And just like that, those credit call spreads are now 10 cents cheaper that you mentioned, which means the S&P is falling, is it not? A little bit. I can see red ticks on the SPX here. I haven't done a thing to my account today. We opened the market and we started rocking and rolling. So let me go check on my positions. I just want to make sure I'm not forgetting any zero DTEs or anything like that. So we see here. Oh, I do have a zero DTE. What the heck is that? Nothing. 2DTE is the closest. Remember that VOO, Victor OO ticker I say I hate and I trade all the time? I can't stop trading it. And every time I trade it, I say, this is the last time. But because we win, I was like, okay, let's do it one more time. So back almost a month ago, 28 days ago, I said I had some expire for a profit. I sell them like 3 months at a time. If the market is on a down skid, I sell put spreads. If the market is rallying, I sell call spreads. I haven't done iron condors on that. I should. I should. Anyway, so we sold March, this coming March, a month ago. So we sold them 4 months out on up days at 675. The thing is at 638 right now. So that credit call spread gave us almost $1 in credits on the risk of $5. So $4 risk, so 25% reward. If you don't do anything and we win, you make 25% on your portfolio. This my bread and butter, folks. This is how I can be a contrarian when I think it's worth it without putting myself too much at harm's way by being reasonable. So this would deliver a win that outdoes the market last year, the most bullish year we've ever seen on record. Because of how it transpired, it was only about 15%, whatever it was, and that's the average, the performance in recent history. So boring trade setups deliver 20%, which basically beat the market. I think you need to learn how to do that. So put it on your agenda to attend the options class. Most likely, not most likely, definitely following the charting class in January. Same city, so. QQQ 631 today. Okay, so I'm going to say, let's go ask the pros. That one has a 2% chance. And 12,000 transactions there. There are 4,000 transactions at 635 for today. Those are most likely people trying to limit the margin required, but that's still strange. I don't understand what's going on. There are a lot of calls up there that are dying. So that's probably somebody salvaging some pennies, but I don't understand how they could be salvaging anything. There's not even a quote on it. So nevertheless, there are 4,000 transactions today. So I would not buy a call based on that. If you anticipate more upside, I would suggest you should buy at the money versus way up there. I don't know what you mean to do with that information when you ask me 631 question mark. To me, it's a ridiculously high number. I wouldn't buy anything up there. Hopefully, that's not why you're asking. Okay, big picture question for today. Middle of the right-hand side of my screen, you saw we opened at the highs, we had a spill, and then we rallied back half, and now we're starting to give back. So the question for the next hour, are we going to give back half? The value is 784 on my screen. The green line. Are we going to give back half and stop and build on it? Or are we going to give back all and test the low of the day and really make it a bad close? Because if so, then the S&P is topped for the day. And if you're holding puts, then that's what you're playing to see what happens in this bunch. Because these guys, believe it or not, they do have resistance, and it dates back months. I don't care how bullish they are right now on Alphabet. I think they ought to respect this purple box 2 days ago's and 3 days ago's and the resistance line that dates back weeks and weeks. So maybe these guys are done and they need these guys not to stink up the joint. So this rotation concept, I mean, how much more can you rotate? We're up 0.6. It's rare that the market is up that much on the Qs and not up that much on the S&P. I don't remember. I mean, I don't have science behind it, but it seems like it's unusual to see that much a difference between the Nasdaq and on the S&P. We'll see. Now we have the range tighten in the IWM. The put is still up 25%. There's no reason to close it if you're still in it, if your thesis is the arrow. But if you close it because you took 10 and it was $250, that's fine. I'm walking you through the mindset of a fast trader. Fast trading doesn't always happen fast. In this case, we're trading an arrow with the intention of exiting inside the yellow circle if we're not out yet. The IWM on the 1 minute is building a more bearish. So unless they break out, that arrow is looming downside magnet. But they do have buyers at 255, so I wouldn't expect the debacle. Should I hold the remaining 3 count Microsoft debit call spread for maximum profits or close it? Okay, so when I'm wondering about booking profits, for myself, I book it. And you have 3 debit call spreads. You're profitable. Close 2 and keep 1. This way, you're still mentally engaged. Worse, I mean, how much more are you missing out on? That's your risk reward. If you're risking $700 to not miss out on $40. Oh, another $450. How big of a debit call spread is this? Okay. How profitable are you? And when you say remaining, it means you scalped it already. $450 is a lot of money. I would not be long anything at this level for today. How about that? This is a rising wedge. It's very extreme at all-time high levels. Not a seller in sight. I wouldn't buy a put just from those comments, but it's stretched for today. At maturity, it becomes 5. Okay, so I'm not able to gauge how much money you've made versus how much you're leaving on the table. If I'm up 40% fast on a trade that ends soon and I'm worried about it, I close it. You can reopen it when you see reasons. Okay, I remember now. Okay, I got you. Okay, so the conversation on Microsoft was a little bit more complicated. Yesterday, he said, I want to go along Microsoft based on my thesis, and I forgot what it was. I said, all right. Sell a put spread, buy call spread was his idea. So he said, I want to sell this put spread to collect 120 and buy this other call spread. Did you go with mine or yours? Mine. Okay. So do me a favor, go find out yours, how much it changed. I bet you mine paid more than the one you wanted. So anyway, I swayed him not to buy the junk debit call spread he wanted to. So he sold the put spread, collected money, bought a call spread. The combination of those two brought you pure profit. Yeah, I would scalp it and just leave runners. This is a volatile market. In the absence of fear, the reactions can be wild, up and down. We're not guaranteed all positive headlines. So you had a good win overnight. Make sure you lock up the profits and leave runners if you want to. And the runners, that 450, that's a big runner. I wouldn't leave a 450 runner. Nice work. Let's look at Microsoft chart to help you out. Okay. Um, Good news and bad news. Good news, it can go to 520 over the next couple of weeks. Bad news, it's going into a very tough spot. It's failed there since November. So it's not going to be easy. 498, I think really, really difficult. The middle of the blue box. Did you hear that? Let me know, Harry. The drum roll is loud. I'm looking on Bookmap in our Discord. The ES is showing me red ticks, and I'm looking at my screen. They're not falling. I forget we're watching the IWM today. I have sellers on the NQ above at 25,987. There's a high poke. So if we get there, there might be some liquidity sweeps. The 7,000 ES looks like it's a little bit hotter than anything else. So be careful falling for a bear trap. 694 is a high poke. There's a bunch of orders up there. So I think whoever mentioned, was it Spartacus? Spartacus, you mentioned 694. Other people were watching the same thing. You can see a ton of orders out there just sitting there on the SPY. If you don't know what I'm talking about and you belong to our Discord, go click on the channel where I'm streaming my screen, the lower left hand corner. If you don't belong to the Discord, give it a shot. Raghu and Mert pour their hearts out in there, and they share trades everywhere. And we have AI trades also and patterns. Worth the money, 100%. We have a small team, Arlenis and I, that helps us maintain it. It is a nightmare. Oh, speaking of Discord, they are going public. Maybe now they can afford better support. Things will change when they go public, unfortunately. I bet you they'll be the end of the party because the kids will not be in charge. Fun factoid, I just learned the story of how Slack came about. Interesting. If you want to read a fun business story, go read that story. It was the product of a failed company. No joke. The guy was trying to build a video game. He tried to build it first. It didn't work. He sold his company or whatever happened. Anyway, he tried to build it again, gathered a new team, got millions of dollars in funding, failed. But in the process, when he had that team, he said, email sucks. So they built a platform to run their business, to have them communicate effectively for their own, to build that game. The game flopped. The guy said, meeting for everybody. He said, we're closing the company. Bye. They paid everybody out fairly. It wasn't like an ugly meeting or anything. He said, and by the way, I'm taking this other piece we built and selling it as a service. But look at it. Slack came out. That was the communication piece that they built internally for their own communication. And they said, we spent more time using that tool than playing the game. So he said, that's the thing to sell. That's the story of Slack. Discord, I don't know the story. Two skaters got together and they said, dude, wouldn't it be cool? All right, so now we have bumpers in the IWM. Nothing is happening here. So I think we need to go back to the S&P. and put the IWM on the side here. What do we say? And ping pong between the two. 30th. If I can replicate a good view here of the IWM, that's what we'll do. Or maybe I'll put the SPY here. There we go. So the S&P also has a W. You see that? Okay. So that suggests that, okay, we can come down to 692.8. Hey, that's the same number as earlier. But also, that whole formation, the last 30 minutes or so, the last 44 minutes, is a flag. It's an expanding, or trying to be an expanding wedge. If they make a higher high, it gives you immediately an extra 60 cents of upside. So 694.55 would be the target if you make a higher high. So you can expect a dip in the SPY. I wouldn't hold puts for it because of the buyers below. And with a threat of breakout. If you are holding puts, please don't expect more than 70 cents of downside without a big change in the options. Okay? So let me see here if I can do that for you. Give me a minute. You see the willingness to buy is still pretty strong on the SPY, middle right-hand page. I'm going to go all in the indices. So we have the Qs up there, not a red poke in sight. Okay, IWM puts, you're up 50%, $46. Now we're talking, right? How does it feel? You're going towards our target. We knew that we had a mathematical target, that red arrow. We also know from science that the circle should have buyers in it. There's weakness down to the breakout. Target 2 is 254.20 down in the middle of the yellow box. Target 2 of that that red arrow has a sister arrow that I didn't draw that points down to 254.20. I didn't draw it because that would have put everybody in a put in a bullish day. I also expect bounces along the lower low. So now we made a lower low and a few lower highs. Same thesis for Meta. First Amazon, then Microsoft, now Meta structure. Meta, I sent the credit put spread already. I wouldn't do both today, to be honest. Listen, this is a record day. We have some stuff going on. Can I push you to tomorrow? Start with one of them, most likely the debit call spread. Buy the debit call spread. It's 350 or 255. Yeah, I do like the structure you propose. I like it. I think you should do only one of those two. Like buy the call spread and wait, or sell the put spreads and wait. I think you can wait on both, my opinion. Yes. Well, somebody asked, and I said, let's find you something. 61%, $60 profit. This is where they should step up to the plate and buy the dip. Or attempt to. If you look left, there was a little jaunt in there. You see that? Right next to the letter I on IWM in the watermark. Okay, Harry, thank you. How reasonable you are. Listen, Harry is like the ideal member here. He comes in, asks very clear questions. I want to do this. What do you think? That's the point of being in a group. Don't trade alone. He has had a couple of bad days, but overall, he's doing very well. I had a bad day yesterday. I told you guys yesterday, it's like somebody said, how can we pick around with Nick's portfolio today? Okay, we'll pick this stock, that stock, and this stock, and we'll spike them to high heaven. Like, I got you. Luckily, nothing was short term. We still have on the SPY willingness to buy. Okay, on the IWM, it's even keel at the money, the rally and the dip. Okay, 84%. You should be out of that trade. Even though target 2 is down to 254.20, you got your arrow, you leave money on the table, you're falling into a pivot point. $80, more than $80. Okay, no problem. No. Mike, I got that inverter. I'm waiting on the cables to come in. My son said he'll crimp me some cables. Wish me luck. Fingers crossed. Burn down the house. What happened? He was trying to hook up a battery he bought on Alibaba. I downloaded the app. It's in Chinese. So I got to figure that one out. Open up my translator. Slick app, though. I mean, it comes with pretty good software. I just need to know how to switch the language. It's all Greek to Irene. All I know, Ovgaristo. Did I say that right? Opa. How to double your money. Join Simple Stocks. This is like a perfect day. We have outside viewers. We have the gang back here. Okay, the credit call spread, Raul, you made $40 per contract. You can stay in it if you promise me you're here. If not, scalp it. The original credit call spread, no, the aggressive iron condor that I offered after the open is back to being profitable $50. It was up as $90. Oh, you can take, okay. It's back to $50, $60 a profit. I would exit that one. That was based on a pretty aggressive narrow range based between 69.60 and 30. If you are good watching risk, stay in it. It could pay you $200 because we are in that range. If the bell rings right now, you would make $250 because that's how much we collected to open. but the range is so freaking narrow. It's 69.60 to 69.30. So if you can stomach that risk, stay in it. But if you're an amateur, like if you have had tough luck this week, if you don't know your way around spreads and you took it, take the money and run. Moochers on YouTube and X. You've got 5 minutes. Join us. Email us if you don't know how to join. Help at simplestocks.net.com. But to join is very simple. You go to simplestocks.com. Right there's like a million buttons that say join, and one of them is blinking orange. You can't miss it. No commitment. You join for a month, you don't like it, leave. I doubt you will leave. We do morning write-ups, mid-afternoon write-ups with longer distance trades if you don't trade fast. This is not what we do, all we do. We meet on Sunday. We have free webinars every Sunday, about 2.5 hours. We cover 100 tickers, literally, your tickers. You tell me which tickers you want to cover. We will do them on Sunday. I work 7 hours on Sunday every Sunday. And you will get 3 videos. You don't have to be there. Just tell me which tickers. I'll do the homework. You watch the videos. Sunday night, you will get another video, 5 minutes, 5.5 minutes tops. It tells you my range for the week. Rinse and repeat. If you did that trade here today with the IWM, you paid for a full month. Commercial over. You've got 4 minutes left, and then you're going to be out of here. The free ones. We can't hide it. We're doing everything in front of us. We make a mistake, it's right there. We hit a home run, it's right there. Hopefully every day we just have base hits. Every once in a while, we hit a home run. Base hits is how you pay the bills. You will never leave. Very few people leave that are engaged in the live room because the benefit is undeniable. First of all, you're not trading alone. You have people watching your back. Like Jack came up and told me, "Hey, watch out Friday." I didn't know. Mike sends me information that's way out there, but it's useful, and he has his eyes a million places. I'm getting emails of other write-ups and other resources that we're covering as well. So we're not going to miss much. And if we miss anything, it's because it came out of nowhere. So trading alone sucks. This is the solution, and it's an easy, cheap solution. Why would anybody leave it? So people that are engaged in the live room tend to be here a long time. I have people in this room that have been with me for 9 years. We can't be, you can't fool people for 9 years if you're not genuine. As an effort, I mean, there's a benefit. Rough dates of the options class, March 5th-ish, that Friday. 1 second, I'll give you exact dates. Well, rough exact dates. Yes, 6, 7, Friday, Saturday. You coming? Put up. There you go, Dave. News program. Wash your mouth out with soap, calling us news. Okay. Do it. I'll buy you dinner. Non-fake news. Fact-based news. It sounds like an oxymoron. Can you imagine somebody putting fact-based news agency? Of course you're fact-based. Otherwise, you're just a uh, supermarket checkout rag. How's the stream going on the Discord? I had issues earlier. It was like flickering. I don't see it flickering anymore. The flickering gone. Okay, so we did target one. Thank you, Pam. We did target one on the IWM. Target two is 254.25. 254.25, which means you make 200% on your put if you're leaving a runner. If you want to buy a put for that one, don't buy it here because this is a support zone. At the risk of missing out, I would prefer to buy it on a bounce. So if they put an effort to get back into the yellow circle, again, that's when you buy a put. When do we stop making higher highs? Not this week. Not this week. Okay, so let me see here. I need to cut. Okay, we need to stop the stream, so I'll come back and finish that thought in a minute. Folks on YouTube, folks on Twitter, thank you for being there. Join the group. I promise you, it's this much of a party every day. Okay, and every once in a while, I provide a little bit of extra entertainment, but all good things in here. Please don't let the idea of there's so many people out there that offer, oh, we do this and that. We do this every day. You just saw what happens. I'll see you later. Bye.